Hello everyone, today is Saturday around 1 p.m. New York time, and we're gonna go with a daily video, the weekly video day, better say, to cover what we should happen next week. Alright, let's start saying this. Next week we should have a breakout in the dollar. If our counts are correct, I still see some counts when we are showing a possible more US dollar weakness, but at the end of the day, next week we should have a breakout in the dollar. So I want everyone you to understand that the breakout can be in the making already from the move from Friday, but to be honest with you guys, we are like 50-50 in reference to that. After doing the whole weekend all day and seeing everything that came out, all the charge, about 84 charge that we are day on the weekend, we came to the conclusion that it's too close to the call. I mean, we don't like to force counts, we never do it, but sometimes what we do is we go with the common sense. If you guys remember, on Thursday in the Forex overview we say that it's gonna happen some type of breakout in the dollar on London on Friday. I mean, and then this is exactly what happened. This move right here exactly happened on Friday. Now, does this move looks corrective? Does this move looks impulse? Is a good question, guys, to be honest with you. It's a good question that we were gonna try to cover to you guys during this this video that we're gonna try to for you later on. Now during the day. Now what we're gonna start doing is, this is the dollar. I think that everyone agree that right here was the end of one, and what we got is A, B, C, this is W, A, B, C, this is S, A, B, C with a triangle in B, and then it comes the move. Now this is on the 60-minute chart. What we don't like is that this is too short of correction, and probably this is only the first leg of the complex correction. Now the key is right here. See what we have right here. So for that, let's go to the 50-minute chart. Okay, what we have right here, and let's put the RSI. Let's put the RSI to the chart. Okay, the RSI is telling me that this is the higher read, and then from here we got another high with divergence. Now what happened is that if you guys see it, this is the biggest correction and this is on the middle. Yeah, it can be an expanded wave 5, but usually you don't get two expanded wave within the same impulse. One of the three, either 1, 3 or 5, is the expanded. That's enough for me, to be honest with you guys, to be alert and call it a B wave. And now what we have is 1, 2, 3, 4, 5, a B, and then a possible wave C down. Now this can be A, B, C, W, S, and then the dollar is gonna do something like this on Sunday before dropping down. So far guys, I gotta be more than honest to you. I'm gonna keep saying the same, that it won't be easy what they're gonna throw to us. You see, like last week we were close to fill almost every position, and guess what, we never got filled by the cat, and we were able to get 85 picks. That now you guys need to check on the dollar index this level right here, which is the 75.78, and see what happened. This can be wave 1. I don't like it, but can be wave 1, and then the dollar can do this, and from here break higher, But I don't know, look at the RSI here. This is a three-wave move on the RSI. If you guys see right here, that's a three-wave move according in my book. There is no divergency. And like I say, I believe that the dollar is gonna drop, and I believe that that drop is the one that is gonna make a deeper wave 2 or B before we go higher for around this level. Now let's see on the oil. Like I keep saying, oil is driving this move. Let's open the oil. 1 second. Okay, right here. Now let's take a look at oil. Look, oil is being very good following the chart, and we still need this move higher in oil, and that move is what we believe is gonna be the C wave within the risk trade. That's gonna take the S&P higher. It's gonna take the dollar lower in wave C before we head higher in the dollar, lower in oil, lower in S&P. Now let's move on to the individual charts. This is telling me, look, lower oil on Friday. What happened? The dollar was higher. Now this is the part when the dollar get back and then the oil get higher. You see how correlate? Now let's move on to the individual pair. Okay, let's start with the euro pound. The euro pound, guys, unbelievable. If you guys remember last week, we sent 5 trades, 1, 2, 4 trades. All the trades came out to be exactly what we did. What we call is what the trade did. The only thing is we didn't get fair in the euro the first time for about 7 picks. Second times for about 6 picks, and then the euro pound we didn't get fair for about, I would say, about 4 picks. Unbelievable. Within those 3 picks we could have made 500 picks in 1 week. Unbelievable. But well, that's part of the trading. Now look, we believe that the euro pound and the correction right here, it got 1, 2, 3, 4. Look, today is Saturday and we gotta move higher right here, which can be the 4. And then what we're waiting is, now I want you guys to understand, we were trading this pair with a high risk. Now our risk is being reduced to this level, which is 88.44 or 88.45 exactly. We were selling at 88.50. Now what we need in this pair is this pair to go like this, and then we're gonna be selling against this high, so our risk is gonna be a lot smaller. Look, it's gonna be divergency in the 90 minutes. Let me put the 60 minutes. It's gonna be divergency already in the next high, so that's gonna be a beauty of the entry. And this telling me that it's most likely that the euro is gonna be stronger than the pound. And this pair, when you see that this pair goes higher, most likely the euro dollar goes higher. So this is what we're expecting in the euro pound. Now let's move on to the euro. The euro, we also have some questions. Why? Because like the dollar, the biggest correction here is in the middle. We got 1, 2, 3. The biggest corrections on the middle. Let's go a little more. I mean, we know that out to here, which is the high, we got 3 ways, so let's not worry about it. What we worry me a little bit is this: 1, 2, possible 3, 4, and then we got a new high, a new low. I'm sorry. What I'm thinking about the euro is that the euro, it can be doing a B way when he's gonna look for 140.04 before the euro goes higher again. To be honest with you guys, I don't wanna say no. But I believe that the euro is more likely into a wave B. Now there is another scenario when wave 3 ended here this is wave 4 right here. I'm sorry, wave 3 ended here, and then this is gonna end wave 5, and this is wave 5 of, I'm sorry, wave 1 of 3. We're gonna cover that, and we're gonna know when. But remember guys, this trade won't go away for us. We're gonna get this trade. The only thing that we're doing is, we've been, last week it was pretty good when it comes to forecasting. We almost right, I would say about 95% of the times. Thanks for the emails that we received over the week. I mean, we tried, I mean, as much as we can, James and me, and thanks for the emails. So what I see is that I see possible, like the RSI is telling me that the highest momentum was here. It's giving me divergency. Now it can be with the end of one, when you got 1, 2, 3, 4, and then like a diagonal 1, 2, 3, 4, and a 5 can be possible. We need more data, but I would say this do not look at the moment like a wave 3. We need more data. I would recommend it to you guys. If you guys got it here, keep it close, put the start to break even and let it run. But if you guys are not within the trade and you didn't get it around these areas, I would rather wait and I play the breakout of the 40-50 before I start taking position here in the euro dollar. Now let's move on now to the pound. Look, the pound, as you guys know, we're calling it corrective to the downside. So the pound looks like it ended ABC, WS, ABC, Y, and then it did S, this is W, S, ABC, A, and I think that the pound, it should be in around to around 163.58. That should be a good short against this high at 165.17. This is telling me that more US dollar weakness is coming. Why? Because you see ABC, WS, ABC, Y, you got 3 ways back, and then because this was at 1, 2, 3, 4, I'm sorry, 3, 4, 5, 6, 7, 8, 9. This was, I'm sorry, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 wave. This should be another 11 waves. So I'm assuming that in another 11 from here, 11 wave, we already have 3, 4. We should get a 5, a 6, a 7, an 8, a 9, a 10, 11. We should get around 63, 58, 64, which is telling me US dollar weakness to come. That's how you relate the market, guys. Now this is the cat. Let me mention something about the cat. The cat, remember guys, we were calling like a flat, and we were expecting these 5 ways that we knew. That's why we sell it here, we get out of here. We expecting this 5 ways to be sharper. It didn't happen. So we had turned the count, and we call it like a 1, a 2, and then 1, 2, 3, 4, and a 5. When we calling this 1, 2, 3, I'm sorry, ABC 1, ABC 2, ABC 3, 4, ABC 5, like a diagonal way C. So now what I like is selling the cat around here against the high at 97.99 for a possible C way down, or if this is a 3 way from the low, for a possible move higher. But this is telling me also that the cat should get weak, that should get strong, and the dollar should get weak very soon. And finally, we're gonna cover the dollar sweeps. This is the proof right here, guys. I was relinquished. I didn't want to do it, that to call this a 5 ways move, but this structure here is incomplete. It's incomplete in the way that what you see is 1, 2, 3, 4, 5, 6, 7, 8, 9, right here, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, and 27. So I'm expecting, because 25 wave is correct, is impulsor right here. This move right here is in 3 ways. That makes 28, and then we should get 31 wave around here, which is corrective. In other words, A, B, C, W, A, B, C, S, A, B, C, I'm sorry, A, B, C, W, S, A, B, C, Y. So you got 3, 3, and 3. And then from here, you got 3 more, but this is a 3-way here. This being a 3 ways, and this being another 3 ways, I have to make 3 ways to the downside. Now, if you go small right here in the last part, you see this, that from here you got 5 ways here, 1, 2, 3, 4, and 5. So what I'm expecting is, I'm expecting 3 ways to around here and another 5 ways. So that's telling me more US dollar weakness to come possible for the beginning, for the beginning of the week. And that's why we're gonna send an order to start buying the dollar sweeps around 87 against the low that we have right here, which was around 85.50. So risking around 150 pips, but we can get that move to the high. That's correlation on the market, guys. Now let's move on to the S&P. The S&P is telling me that it's gonna be some type of risk on trade. Look, everything is following the path that we mentioned, guys. Look, A or 1, and then you got corrected to the back, and expecting Monday and Tuesday the market move higher. That move higher is gonna be short weakness in the dollar. It's gonna be oil higher. That's gonna be euro higher. So that's what we're expecting, guys. The yen pairs, I see all the yen pairs in a C ways most likely, and maybe the euro yen can rebound higher. That at the end of the day, I think that the yen weakness, the UN strength is about to end, and the yen should be turning higher very soon. So that's what we're expecting, guys, for the first 3 days of the week. We're expecting a little bit of dollar weakness, and we're expecting S&P higher, we're expecting oil higher, gold and silver stay away of those two, even though we like the gold long, but it looks like what he did was a 3-way, that the structure from the recovery is not that beauty. So that's what we're expecting for the week, guys. So be aware, and get back to you guys on Monday.